Hi, I'm Eric Rich.
And I'm Kyle McClure.
Welcome to this week's edition of the Reich Asset Management Weekly Market Report. So, stock market up almost 1% last week. And also, while with that, oil prices rose over $80 a barrel because the deal so far in Iran has not materialized. I'm not excited about the idea of it materializing anytime soon because it's not going to.
Not going to.
July inflation report was great. It was very low, 0.1%. PPI was 0, so year over year. So that's really, it's high, but those numbers are encouraging. So that made me feel really good about whether or not the Fed will or won't raise rates. Retail sales in July was negative, well below expectations. So again, another sign of economic cooling to an extent that also makes the Fed less and less likely to raise rates.
Which is really what we're looking at. So we've got some important data points coming out this week from the housing perspective.
That's a big
We're keeping an eye on the bond market as obviously they tell us the future path of interest rates. Based off of that data last week, the chances of a Fed rate hike in September were about 55% this time last week. And now they're about 30. So with those with those inflation numbers that you just gave, and the job numbers the week before, it has kind of given the Fed some room to continue to let things play out and not raise rates. I've shared with some clients that if you would have told me back in January that there was an opportunity to raise rates, I would have thought something catastrophic happened this year.
Agreed.
And it kind of did with the conflict in Iran, but. That was a shocker that we're even talking about that, but of course it's since gone down to 30% the chances of a rate hike in September, so not overly concerned about that right now. Still a lot of time between now and the next meeting.
And I like that the Fed is really being cautious about it. They're not just being reactionary, and I feel like for the last few years they have been reactionary. I've been no fan of the Fed for the last few years because they're overreacting all the time to news and everything else. And this new Fed governor, I really feel like is really taking his time and being more methodical about things, which I love.
Yeah. The Fed's never quick, right?
No.
And specifically this time, that's a really good thing. One last fact I want to share. Bank of America came out with a recent study about this K-shaped economy and how it's starting to be less K-shaped. We've talked about it several times. That's not the type of economy you want to be in. That's when the wealthy are doing really, really well. So you got the top part of the K. And the bottom of that K, they continue to do worse. That gap is starting to close a little bit with the top wealthy starting to spend less while the bottom is starting to spend more. What that tells us in the future, don't know, but you want to start to see that. So more people spending is always a good thing and not just the top percentile. So Eric, as we're getting close to fall, I hate to say that, what do we got coming up?
On September the 16th, Jody is going to host another of her Women in Wealth workshops, which are, again, very, very popular. So if you haven't been to one of those, you might want to consider it. And in October, we have a Medicare seminar, which is perfect timing for coming into the season for choosing Medicare plans and open enrollment. And then in November, we're going to have a young adult financial literacy seminar again.
Things starting to pick up as we head into the cooler months.
Oh.
Yeah, none of us are happy about it. Thank you so much for joining us. Any questions, please give us a call, 609-486-5073, or visit us at richassetmanagement.com.
Thanks, everybody. Have a great week.